Quick note before we begin the episode. Episode 200 is fast approaching, and to mark the occasion, Hussam and I will host a special Q&A session with questions from you lovely treasurers. Click on the link in the show notes to submit your question, and we will even send a $10 gift card for our favorite 5 questions. It can be about careers, treasury, Corporate Treasury 101, or even what Hussam's favorite ice cream flavor is. Deadline to submit your question is December 15th. Have a lovely episode.
Welcome to the Corporate Treasury 101 podcast. This is the third and final part of our full interview with Oscar Coyle, where we discuss what TreasurySpring is and their solution. In the episode of today, expect to learn what does TreasurySpring offer to corporations in terms of short-term investment solutions, how does it differ from other solutions on the market or the traditional money market fund model, how does TreasurySpring solution addresses the challenges of rising interest rates and the need for better risk management, what sets TreasurySpring apart in this space, especially considering the current challenges in the market, and of course, much more. We really hope you will enjoy the episode. If that is the case, and when you're thinking about how you found our podcast, chances are that it was through word of mouth, social media, or a recommendation from your favorite podcast platform, or even YouTube. And this is our only request to you. The best way you can support the podcast is to head to YouTube and subscribe to our YouTube channel, Corporate Treasury 101. That will mean the world to us and help more people learn about Treasury.
On another note, this episode is brought to you by Automation Boutique. Automation Boutique is empowering treasury, finance, and risk management with tailored automation solutions. They use robotic process automation, or PA, AI, APIs, and Power Query to create automations that can work with your existing systems. We partnered with Automation Boutique as we really like their approach to innovation and how they help the industry. For this partnership, they came up with an AI-powered automation self-scan that can help you find out if a business process is suitable for automation and how to best get started. It is totally free, non-intrusive, and only takes about 15 minutes. What's great is that the report you will get from the scan helps you determine if the benefits of the automation outweigh the costs. If you want to have a look, head to the link in the description or to automationboutique.com/corporate treasury 101.
And with all that being said, please welcome Oscar Coyle.
Oscar, thank you so much. Clearly, it's a super interesting field. I think there's a lot going on in that specific space, especially with everyone frantically running around to figure out what they're going to do with this high interest rate environment, or at least what's the best thing that they can get out of it, right? I want to touch a little bit on TreasurySpring, which is the organization that you're from. So what do you guys offer to corporates in terms of short-term investment solutions?
Yeah, so we are a bit different. We do offer something a little alternative. So we are the only institutional cash platform that allows businesses to access the very best in cash products when you think about risk-adjusted returns. So we allow businesses via one onboarding, one KYC process to access over 75 different counterparties. So those counterparties range from the banks we've mentioned, the SSAs, governments, and including some corporates. More nascently, that's that corporate field. And importantly, what we do is we allow for repo. So allow businesses to access the repo market. So we've built the infrastructure, built the connectivity, built all of that pipe work so clients can come into our platform and access secured lending products to these banks. And we believe that these repo products offer some of the highest risk-adjusted returns available in the market. So we have around 300 corporate treasurers using us at the moment across a variety of different industries. So whether that be, large listed businesses or financial institutions or smaller, medium-sized enterprises. And we've seen over $75 billion worth of issuance via our platform. And really, the need for TreasurySpring was sort of forged in, when you think about hedge funds and you think about banks and other very large financial institutions who are very sophisticated, and you think about how they manage cash, what are they doing? They're thinking about cash as a proper investment. And so they are thinking, right, where is my credit risk and what is it? And is there a way to lower it? And the way in which most of these businesses do it, most of these large, sophisticated organizations do it, is via that repo market. So they don't only take that bank risk, they take a collateral, so they take a position of securities, whether that be high quality liquid assets like government debt or what have you, or a broader basket of debt. This is then posted to the tri-party agent. The tri-party agent manages that on behalf of the client, and then should that bank go bust, this basket of collateral is then liquidated and clients get their cash back that way. But accessing this product, very difficult, time consuming, expensive, all of the above. And what we've done is enabled them to do it quickly and easily.
Typical. And that's your specific USP, is the getting access to the hard stuff easier.
Exactly right. So I would say, we have probably about a third of our assets under management is in repo right now, maybe another third in SSA, and then the rest in direct government and corporate and unsecured bank risk. Something like that is probably the split. But what makes us different is we've broken down the barriers to access repo. No one else has done that as yet. So what we're doing is enabling businesses to manage their cash in a more efficient way very easily, without the usual heavy lifting, the usual onboarding and everything.
And have you seen that business model that you offer is a lot more favorable in the current interest rate climate? And if so, what advantage do treasurers get from that? Yeah,
definitely. So we offer anything from 1 week all the way out to 1 year. And the way in which we deliver that is via fixed term funds. So these fixed term funds offer exactly that. So it's a defined credit risk to a single obligor of the client's choosing for a defined period of time. And the cash is always held to maturity. So these vehicles are self-liquidating and there's no mark-to-market volatility. So you put your cash in, you get your cash back plus the level of interest that was agreed. And sometimes that can be secured. So if they've chosen a repo, sometimes it can be government. So it might be a UK T-bill or a French government T-bill or Dutch government T-bill, whatever it might be. It might also be some SSA paper. Now, what's different about what our platform is, clients on board once, they KYC once, and they have access to that full curve. So they can keep their cash relatively liquid in a 1 week repo product if they like. They can keep their cash out 3 months, sort of keeping it under cash and cash equivalency rules. Or if they want to, if they think we're getting to terminal interest rates, they might term it out even further, go out to a year and make the maximum use of that value. I think, with any cash product which is offering term, having very, very low interest rates means that, terming it out isn't that valuable. So of course, rising interest rates, the opportunity cost of doing nothing with your money has increased massively. And so now clients are able to do that with us via one platform.
Super interesting. And are you managing these funds yourself, or are you sort of like a broker for multiple funds out there?
So look, good question. So we're not a broker. We're out there originating these deals. So we have the relationship with the underlying banks, with the underlying SSAs, or if we're using a broker dealer, with the broker dealer as well. So what a client does is they come into our platform, they'll choose from a menu of short dated fixed income products. So whether that be a 1 week repo or a 3 month SSA paper or a 2 month government bill, they'll then select that. We then, on the other side of that, go away and purchase the underlying asset. And then the client is issued a fixed term fund, which is their fixed term fund and their fixed term fund alone. And so it gives them full legal segregation from everyone else on the platform in other products. So their credit risk is only with the obligor that they've chosen, and there's no commingling whatsoever. So there's no one else's cash in there. It's their cash and their cash alone. And also there's no maturity transformation. So if I'm in a 1 month fixed term fund, the underlying asset is a 1 month asset, which means there's no liquidity risk in the sense of mark-to-market volatility. What you get is you put your cash in and then you receive a cash back plus interest upon maturity.
Amazing.
That sounds like something that could be definitely of interest. What's required, though, on the implementation side of things, Oscar, for a corporate? Like, do they access your dashboard or your solution from the cloud? Do you integrate with the TMS? How does this whole thing work?
So it's a simple desktop website. So simple API. So clients log in. They'll, they log in passwordless entry using, Google or Microsoft 365 or whatever it might be. And then they've got access to all of those different places for cash. Now, in terms of integration, clients, we produce reporting, which we plugged into TMS. So clients can see within their TMS where their holdings are. And we produce monthly statements and everything like that as well. We plug into other portals in terms of reporting if clients want to see them within those. So there's no complicated integration needed. There's no TMS implementation process or anything like that. This is from a technology standpoint, in terms of actually using it, it's very straightforward, very, very easy to do.
And if you don't mind me asking, Oscar, so how does it work? Is it the corporate paying for the solution, and then there is like some bits on the investment? Is it on the bank side? How does it work exactly, if you don't mind sharing?
So a client invests and they get a rate of return, which might be, let's just say 5%, and that encompasses any costs, fees that we have. So we don't charge an onboarding fee, we don't charge a usage fee. There's no minimum balances required. So if a client likes the look of a price and they invest, then they'll do that. And then that's where we make our money, within that transaction already built in. So if a client sees 5%, client gets 5%.
Awesome. Oscar, thank you so much. Anything else you'd like to add to short-term investment, the landscape, what treasurers can have and choose among the different options, or TreasurySpring even? Did we cover everything, or anything you'd like to add?
Yeah, look, I mean, just in terms of short-term investments broadly, right? What does a client want to be thinking about? They want to be thinking about their credit risk. So what is the institution they're placing it with? So are they looking at credit rating agencies? Are they doing their own in-house analysis? Are they using all of these tools we touched on earlier? So they want to know where that cash is and who it's with. They want to think about, do they have access to alternative homes for cash? So something like the government or SSA, which we've touched on, or even accessing corporate paper, which might be a bit of a stretch for some treasurers, but having somewhere where they can diversify not only across institutions, but also across asset classes, sectors. And then they might also want to think about, how can I take collateral? So how can I access a repo so that in the case of a default, I have that security? So is there a way in which I can do these things? Because, again, it comes back to stripping it back. What is cash management? It's investment. You're making decisions with that cash, and there is risk to that cash. I think we're in a really challenging time. We're at high levels of inflation, high interest rates, bit of a guess to try and work out where terminal rates will be. Are we in higher for longer? Are we going to see a cut soon? So it is an interesting time. But I think it's, that's how clients should think about it. And, one instrument that offers sort of that security is repo. And at the moment, what we're doing is breaking down the barriers to enable easier access to it. It's as simple as that.
Awesome. Thank you so much for that. Oscar, if our listeners would like to know more about you or TreasurySpring, where should they go?
Absolutely. So TreasurySpring.com is our website. We're also obviously on LinkedIn, and we're regularly posting on there. Feel free to reach out to me directly, ocoyle@treasuryspring.com, and we'd be more than happy to connect. Look, we're at all the conferences sort of on the circuit you might expect. We're going to the ATEL later this month in Luxembourg. I mean, it may be before this podcast is out, but we're there. We'll be across Europe at the DACT in March as well. And then, of course, the usual conferences of the UK, the ACT, ESG conference as well.
Fantastic. Absolutely awesome. Thank you so much, Oscar.
Thank you both. Cheers.